Hey, what's up, guys? Thanks for joining me on this YouTube video. Today we're going to talk about how to finance your real estate investment. So the first one is pretty obvious to most people is to get a job, right? Get a W-2 job as an employee. Yes, it is not the ideal path for people who want to be an entrepreneur, but at least it pays the bills and it gives you access to something called conventional financing. So most lenders out there, they'll give you something called a conventional loan, which is basically a loan that's backed by these two government enterprises, Fannie Mae and Freddie Mac. We don't have to go into the details, but basically you get the lowest interest rates available if you're a W-2 worker, and you are going to be able to get a loan within a very short time span, within a couple weeks. Most times for conventional financing. So that's my first advice is if you don't have a job already, get a job because that'll give you access to conventional financing. One of the best ways to lend out there. In fact, it's a lot better than getting loans as a self-employed worker, because if you're self-employed, it's a lot harder to get approved for a loan. The second way to get started in real estate investing through financing is to do an FHA loan. So you heard probably people talk about house hacking, where you basically live in one room and you rent out the other bedrooms to your roommates, and the other roommates are basically paying the mortgage for you. FHA loan is a great way to get started because you can put as low as a 3.5% for a down payment on that house, which allows you to basically get a property for only like 10, 20, $30,000, which is very little money out of pocket, and allows you to really leverage your cash that much more. The only issue with the FHA loan is you can only do it one time. So if you do an FHA loan, before you do a second FHA loan, you have to refinance your first FHA loan to a conventional loan. But yes, FHA is one of the best ways to get started because you hardly put any of your own money in there. On top of that, if you wanted to go a step further and rehab the house and maybe do a flip or something like that, you can do an FHA 203K loan. Now, the downsides to an FHA 203K loan is that the government has to approve every step of the process. And as you know, the bureaucracy takes some time. There's a lot of red tape. And so getting approval for that and the renovations, and for the government to pay for the renovations through a 203K loan, it can be a lengthy process. It could take quite a bit of time to get that done. The next type of loan is called the VA loan. So anyone who's worked for the military before, they can get a 0% down payment VA loan, and a lot of military members use that to get started. Also, if you're active duty military member, you can do a BAH, which is basic allowance for housing, which the government basically pays for your housing while you're in the military, while you're on active duty. So they give you a certain amount, a couple $1,000s to pay for the mortgage, and you sometimes have some money on top of that as well for BAH payments. And you can just Google BAH in your state, and then you can or in your state and your county, and see about how much do they pay for BAH if you're an active member in the military. The last type of loan, of course, is private money. It's hard money as well, but we won't go into that because interest rates for that is extremely high. It's more like 8 to 12%. Private money, on the other hand, if you know someone, maybe you met someone through a real estate investing meeting and got some private money that way, or maybe you have your parents or your relatives who are willing to cut a deal with you as well. What I recommend is approach it from a very professional approach. So basically create your own presentation, know how much houses are selling for, and have your target purchase price in mind, and also have what the mortgage payment will be and what your general expenses will be, and then have a target market rent. And you don't want to make sure you don't overestimate like the target rent, for example, because if you overestimate that, that could lead you to be negative cash flow, or maybe you invest in this deal and it's not going to work out for you, and it's going to lose you money, right? So you want to make sure you get your numbers down very well. Do your research. Present that research to either your family or maybe someone at the real estate investing meeting and say, you know, this is what I'm thinking of doing. And then what I really recommend is having a personal guarantee. So personally guaranteeing that you will pay the person back no matter what. Like even if you lose money, even if things go south, right, you still will make that payment toward that person, you know, to that person. They'll get paid first, right? That's very important for them to be able to trust you on this loan. So have a lawyer, of course, look over a contract that you draft with the person you borrow private money from. But I recommend as an investor, what you can do is personally guarantee the loan and make some sort of promise to them that they'll get a certain return per year that they can count on until the loan is paid off. So those are the 4 ways to get into real estate investing, even if you have no money or very low money. Obviously, there are other ways out there, but those are the top 4 ways I recommend you get started to finance your real estate investment, your very first real estate investment. I hope you guys enjoyed this video. I'll see you guys next week. Please remember to like and subscribe if you love this video.